REITs are operating on a fairly strong basis from a fundamental perspective. And this goes back, I think, to something that we've been pretty consistent in saying, in that the real estate industry is used to operating in periods of uncertainty.
Hello and welcome to the REIT Report. I'm your host, Sarah Borkson-Keto. This week, I'm pleased to welcome Tim Bodner back to the podcast. Tim is PwC's real estate deals leader and is here to share his timely insights into what today's uncertain market environment means for investment patterns and transaction activity. Tim, thanks for joining the podcast today.
Sarah, thank you for having us.
Tim, as we approach mid-year 2025, how would you describe the overall sentiment that you're seeing in real estate markets today?
Yeah, listen, there's certainly a lot going on here in the US and around the world, from shifting geopolitical interactions to changing public policy to a forthcoming tax bill and the like. And there's a lot of change happening in the market. And I think despite all that, when we look at the overall state of the real estate markets, they're actually hanging in quite strongly, to be honest. And I think in a different place than where some would have expected we'd be at this point in the year. It doesn't mean that there's not challenges to be addressed. There certainly continues to be challenges that need to be worked through. But on balance, I would say the real estate markets are a good place at this point.
And how would you say that sentiment is being reflected in transaction activity today?
The way we look at where we are, I think, is in two buckets: kind of traditional versus kind of non-traditional. And on the traditional side, so if you look at office activity, retail activity, logistics activity, there's a fair amount of activity going on, including within office. I think just within the last kind of 30 to 45 days, we've seen some large US office privatization transactions or potential privatization transactions. There's a lot going on in a hospitality and leisure space that's been interesting to see, and certainly things, in senior housing like going on. So when you look at the traditional asset classes within real estate, there's continues to be a momentum in the marketplace, which is great to see. I think the other thing that we've been talking about for a while, from our perspective, we've been talking about this widening of what's considered to be investable real estate and kind of the blurring of the line between real estate and infrastructure. And when we look at where we are today, that trend, I think, is accelerating further. And we think that the groundwork is being laid for that activity only to build as we move into the back half of changes that are in the forthcoming tax bill stay where they are. But the data center activity continues to be quite active, and there's a lot going on around things around new energy infrastructure. Oftentimes, when we look at the month-to-month and quarter volumes, a lot of the data is on just the traditional side, and it doesn't always incorporate this non-traditional side. So when you put the two together, it's actually a fairly robust picture at this stage.
And Tim, are you seeing any shifts in foreign investment patterns due to changes in global trade policy?
A lot of foreign capital flows. There's from year to year and month to month and quarter to quarter. We see shifts from time to time, and that's, from our perspective, normal activity. I think if we take a step back and say, have we seen anything meaningfully change because of some of the things going on? Or like, I think that our perspective on that is not at this stage. We continue to see a fair amount of activity from Canada, Asia. Middle East activity is quite strong. I wouldn't say anything abnormal at this stage. Certainly, there's changes that are attributable to when you look at the cost of capital and the interest rate environment here in the United States. That's certainly impacting some investors' decision making. If you look at just the volatility in the US dollar relative to other currencies, that's impacting some folks' decisions. But we look at that as normal changes in terms of, because of some of what else is going on in the world. We haven't seen anything in terms of material shifts at this stage.
And Tim, could you talk a bit more about how the current macro and tariff uncertainty is impacting construction costs and supply across key real estate sectors?
Sure. I think if you look at construction costs, and in a high inflationary period, we're still coming out of that. And so when you look at construction costs across a whole range of areas. They are elevated. It's too early at this stage to have seen material shifts solely because of the tariff. So the construction costs have been elevated slowly, but we haven't seen any kind of new inflationary pressure solely because of the tariffs. The other thing that I think is really important, and when we look at the current macro, we tend to look at it in terms of what the administration is trying to ultimately achieve, and we think of it in three buckets. First, when you look at the United States relative to the rest of the world, we have been in a trade deficit with many countries for an extended period of time, and that trend is unsustainable, particularly when you look at it in certain areas that we consider to be strategic to the United States is national and economic security. And certainly fixing the deficit in those strategic areas is a core objective of the administration. And that in the short term could have some inflationary pressure in some areas that may impact construction costs. Certainly, there's still pressure on the system. It's real pressure. It's impacting development decisions. But I think what we'll see here, what happens by the end of this month and through the second quarter, it certainly feels like the groundwork is being laid for the cost pressure over time to be further reduced on the construction side. The other thing to mention, Sarah, and this has been the case for some time, is that the real estate industry has been quite disciplined across sectors and asset classes on the new supply front, and that there hasn't been a lot of new supply. Certainly, these things are further impacting that.
Great. And looking at lenders, are you seeing them adjust their strategies in response to uncertainty? And if they are, is this impacting certain commercial real estate sectors more than others?
The real estate capital markets have been experiencing shifts for some period of time insofar as the traditional real estate lenders, folks like the large banks, the regional banks, the life insurance companies, their proportion of total lending volume has actually been decreasing for some period of time, and that's particularly true as it relates to the regional banks. But what we are starting to see is private credit start to play a more meaningful role. What's really interesting, Sarah, about that is I think some, when they hear private credit, it has this private equity lens to it, which it may be associated with higher cost of capital. But what's really interesting is that there's a lot of insurance company money that's coming into the real estate market through the credit market. And that cost of capital is actually better than what some may think. So when we see changes in strategies, what we see is that we see the private credit markets, particularly where there's insurance companies behind it, playing a more meaningful role. And that's certainly across all sectors to some degree. The other really interesting thing is the CMBS market activity in real estate, even candidly in office. Now it's the higher quality office, but the CMBS market has been incredibly active since the beginning of 2025, which is really encouraging to see that traditional source of real estate capital continuing to operate at such a high volume.
Great. And to what extent do you see tariffs and general uncertainty impacting market growth and capital flows? And how would you say REITs are positioned to cope in this environment?
Yeah, listen. There's certainly uncertainty created by the approach to tariffs as well as just policy in general. And when you look at that uncertainty, it is certainly some degree impacting a wide variety of areas, including growth and capital flows. And so that is certainly true, and it can't be ignored. I think how significant that uncertainty is and how significant it's impacting growth and capital flows, I actually think is starting to decline or become more modest in the sense that particularly when we saw what happened over the last couple weeks with China, what we saw last week with some of the activity that came out of the administration's trip to the Middle East. So our perspective is that over time, as we move throughout the balance of 2025, that uncertainty is going to continue to decline, and that's going to have a positive impact on growth and capital flows. In terms of REITs specifically, listen, as public companies, as you and your audience knows, REITs, public share prices are very sensitive to the interest rate environment. And as interest rates continue to be volatile in the short term, we'll continue to see share price volatility in the REIT space. Having said all that, as a group, REITs are operating on a fairly strong basis from a fundamental perspective. And this goes back, I think, to something that we've been pretty consistent in saying, in that the real estate industry is used to operating in periods of uncertainty. They're used to operating in periods of a cyclical change. And this is just another one of those things. And they're focusing on what they can control. And so our perspective is that the REITs are positioned in a good place at this stage, given everything that's going on.
So would you say there are any certain strategies that REITs are adopting in order to get ahead of this complicated transaction environment?
I think when you look at where we are, Sarah, we are in a higher cost of capital environment, and that is certainly going to be it for the foreseeable future. It doesn't mean that the cost of capital is high today; it's just higher than it has been for a long period of time. And so, what we see real estate investors doing across the board, whether it's a REIT or an alternatively structured vehicle, is being much more focused on the operations and being much more disciplined in identifying meaningful levers of value creation. So that could be things like technology solutions, leveraging data more, being more focused on how they think about mitigating the cost of insurance and the like. So a lot more operational focus than maybe was the case in the past is certainly part of what we're seeing in the market across the board. The other thing that is true, Sarah, is that scale in this environment really matters. And it's going to continue to matter moving forward, particularly when you think about the effects of artificial intelligence and just the cost of having access to data and the like. And so there's a lot of, I would say, activity around figuring out what's the right scale to have to operate in this new environment, which likely will lead to more public to public and public to private transaction activity in the REIT space.
Tim, we've covered lots of ground, but is there anything else that you think is relevant to our discussion today?
Listen, sir, you do a great job in identifying timely topics to talk about on the podcast. I think the biggest things that we're focused on, number one, it's this convergence of real estate and infrastructure is real. It's certainly going to have an impact on the REIT market. And so when you think about the construct of the REIT industry moving forward and the like, that's certainly going to be a more meaningful part of it. Two would be around the importance of value creation, the importance of having kind of a disciplined operating philosophy is certainly part of it. And third would be, like, listen, it's going to be a little bit choppy for as this transition happens around some of these policy areas. But when we take a look at particularly the REITs, the industry is quite well positioned to navigate through this, and there'll be some challenges along the way. But as we've said before, the real estate industry is world class in finding ways to navigate through and adapt to the environment that's presented to them.
Tim, thanks so much for your time today.
Thank you so much, Sarah, for having us.
And to our listeners, if you enjoyed this episode, please subscribe or leave a review on your favorite podcast platform.